We're answering your money questions with financial expert Terry Savage. Good morning, Terry.
Good morning. Well, there's even more news just since that report that you gave. It's a case of good news is bad news. The Fed report, the economy reported that payrolls rose more than expected, 239,000 last month, and wages were up a strong 7.7%. Mostly this comes from the leisure and hospitality industry rebounding, but the whole idea that the economy is stronger or maybe stronger than expected tells us that not only is the Fed likely to raise rates by 75 basis points this month, there was hope that maybe when they get around to it in December, it might be a smaller raise. Now you're seeing the stock market going, oh no, let's sell off a little bit because it looks like the strength in the economy might cause the Fed to even increase rates more in December. So that's the game that's being played out. Good news is bad. A strong economy means the Fed has to clamp down more to slow demand, to kill inflation. And yes, that could throw the economy into a recession next year.
Well, we'll see what happens. In the meantime, let's get to some viewer questions. Here's the first one. You were swamped with questions about I bonds. I see that Series I savings bonds prior to November 1st was 9.62% on Treasury Direct. Now I see it as 6.89%. Is this still good place to put $10,000 for me, my wife, and 3 children? That's a specific question.
Yeah, it is. Well, let me explain what happened last week. There was a frenzy. I've never seen a frenzy like this, nor has the Treasury. And I was talking with them really several times a day. They sold nearly $4 billion of Series I bonds before the Friday midnight deadline for that 9.62%, almost $1 billion on Friday. To put that in perspective, that's more than they sold in the last 3 years combined. $1 billion in one day. So the website was running slow. People couldn't get through. And as of this yesterday morning, Monday morning, actually, November 1st, the rate dropped for the next 6 months, and that's to 6.89%. A little bit of a technicality there. There's a base rate now of 0.4% that will carry with that bond for the rest of its life. But 6.89% is not a bad rate. You get that for 6 full months. Everybody who bought even on Friday at 9.62 will get 6 full months of the 9.62, and then the subsequent 6 months will drop to the 6.89. Now, here's the pros and cons of it. If the Fed does get the economy under control or causes a recession and everything slows down and rates drop eventually, then the next 6-month adjustment could be a lot lower. So you buy savings bonds, not only for the current 6-month rate that you get, but for the knowledge that you're going to keep them, you must for at least a year. There's a 3-month interest penalty if you sell them before 5 years. And sure, it's a great gift for young children. You can put them in your gift box. How to buy I-bonds is posted at terrysavage.com. But there's a better deal around.
Okay.
I think a better deal. This is that you can buy U.S. Treasury bills. Those are IOUs of 3 months or 6 months, 13 weeks or 26 weeks, right at treasurydirect.gov where you opened your I-bond account. And you can start with a minimum of $100. And by the way, you don't have to have a limit of $10,000. Got an extra $1 million? Pour it in there. The current going rate is about 4.6% for 6 months. That'll change every week. There's an auction on Mondays, but it's about 4.6%. And you can have them renew those at whatever rate is, or not renew them, send the money back at the end of 6 months.
Gotcha.
So that's also terrysavage.com.
All right, another quick question here. Can you not use a Hotmail email account to buy I-bonds?
Oh, this was one of the biggest problems. The Treasury, when you opened an account, sent you an email saying, hi, Mrs. Smith, your account number is X4029X, but no Hotmail. The Hotmail server bounced all those emails from Treasury. They couldn't do anything about it. They actually trusted me to pass them on to the readers who posted at my website. So those people got in, but it's just it was a tech glitch, and I think you should, if you're going to open an account, I don't know that they fixed it, you should probably have not a Hotmail email account to open at treasurydirect.gov. There's a snafu there.
All right. Well, if you want to ask Terry a question, you can go to terrysavage.com. Thanks, Terry.
Thank you.